Yeah, so actually we took a very big picture view of the whole space. Again, thanks for having me on the show. We looked at 50 fintech stocks over, multiple quarter, multiple years. And what you're seeing is that they closely track organic growth for the companies, which makes sense. It's very, it actually makes sense when you think about it.
Sure.
But there is a turning point, which means we've troughed in terms of growth decline. We've troughed in the first or second quarter. And that's why we're actually calling for a massive rebound of the whole space into the second half. And I think what you're seeing today is probably the beginning of that. So it's actually fundamentally backed for the whole space. And then there's some selective stock picking where we think we can get some extra alpha.
Wait a minute. Tell me about this growth decline. We're not supposed to have growth declines amongst, super hot startup names. What's been going? I mean, obviously we know the Robinhood story, but what's the story for the rest of the space?
Yeah, it's not declines. I should take it back. It's actually decelerating growth, right? So stocks actually react very positively when growth is reaccelerating. And what we've been through because of the, I call it like FIFO, right? First in, first out. So we went into COVID. Tech benefited dramatically or fintech specifically dramatically from COVID. It also saw the toughest comps, because of COVID. For example, Robinhood's toughest comp is first quarter of 2022, right? Because that's the meme stock kind of era of last year. So once we get through that, so it's not like growth is declining, it's actually just slowing. The reacceleration in growth is what's going to get the oomph or the momentum back into those stocks into the second half.
So significantly, you think that on Robinhood, it appears to have inflected positively and bottomed. On PayPal, sentiment is over-concerned. You expect to snap back into positive momentum. And then I want to ask you about the two names you're actually still worried about right now. And one of them is Visa, which is suddenly seeming to have some traction as the reopening, gathers steam. They had great earnings, a huge stock reaction. Why are you worried about that one in particular?
Yeah, so Visa is kind of the queen of the ecosystem. It sits in the middle of the ecosystem. It's been for years and years a great stock, and I think they definitely had a great quarter. But we look at it very long term, and the work that we've done when we downgraded them several weeks ago shows you that there's real risk to their model, to their business model. Companies like Plaid are account to accounts payments, real-time payments, buy now, pay later. All these things are nibbling at their growth long term. And that's why we think that the future for Visa isn't going to be as good as its past. Plus, cash to card is a huge driver of growth. Because of COVID, we had such a massive transition from cash to card.
Yeah.
We had 5 years in 1 year. And that's what makes it very difficult for the long-term business model to be as strong as it was in the past.
The final one is a heartbreaker for a lot of people who loved this stock and have just, I get questions about it all the time. Coinbase, they say, okay, we get that Bitcoin's down, but why has the stock done so poorly? And why are you worried about it, especially on their first quarter?
Yeah, I think Coinbase, the numbers are just too high for the first quarter. But the long-term view of Coinbase, and that's why we don't like it, is that yields or take rates continue to come under pressure, right? Coinbase is only 2% of the global Bitcoin market. It seems big here from our perspective in the US, but global market share is actually just 2%-ish, right? So the long-term decline in take rates over time, that's what worries us. Stocks hate it when the take rate, the yield or the spread keeps coming down. And that's what we're seeing with Coinbase as crypto trading becomes more and more competitive. And that's the issue with Coinbase. That's the majority of the revenue and the biggest risk to the stock. All
right, fascinating. So let's end it with Robinhood. For everyone out there who's beleaguered and holding it or wondering if now's the time to buy, where do you think it should be trading at? What's its proper valuation?
I think the stock should be going to 20 very, very soon. I mean, this stock has gotten, really tarnished, right, over the last few months. And some of it was merited because the numbers weren't good. But you're seeing that inflection. You're seeing kind of the decline in monthly average users becoming less negative. You're seeing kind of what we call the first derivative becoming more positive. So I think that valuations in fintech are high to begin with. But I think on a relative basis, we see that $20 benchmark coming in very quickly. If the stock continues, the fundamentals continue to trade or to turn around like they've done thus far.
All right, it's at 14 right now. It's up 10% today, and so that would be another pretty big move from here. Dan, thanks for all your time. We appreciate it.